Hi, folks. Welcome to another episode of Cash to Code podcast series. I'm Abhay. Today I have with me Amit to host the podcast, and we have Anish and Mabel, co-founders at Open, along with us today. Anish and Mabel both have been serial entrepreneur before founding Open. And a quick intro about Open. Open is one of the India's leading fintech startup, actually 100th unicorn to come out of India. And they are enabling more than 3.5 million SME, MSMEs with connected banking and banking products. They're processing more than $50 billion worth of transactions annually. Amit, I think you know Anish and Mabel both for quite a long time, so maybe a quick background on their journeys.
Yeah, I've known them for like 10 years.
Wow.
So I don't know where to start, but I think a lot of people actually tell me that, you were very early in the fintech space. And here are two guys who are way, way earlier than me in payments and fintech space. So some very interesting things, right? Like regular things I think we hear about and read about Open and you guys. But I'll just like to tell the audience 3 or 4 things that I know. One, Anish and Mabel are the kind of entrepreneurs who, when required, they slept on a railway station and they did very hard things to come to this point, right? People think it's an overnight success story, and it's been like 18, 20 years of a lot of hard work which has gone into it to reach the place where they have reached. Second very interesting thing is they are a couple, they are husband and wife, and I think they found each other through Google. So maybe we'll kind of, maybe we'll start there, start asking you like, how did it happen? What is the backstory? And just before that, I also want to tell you that together, we at Medici and then Open, we did India's first payments hackathon in Bangalore, and it was a phenomenal success. So that was in 2014. Okay. And these guys have been doing payments and fintech since 2006. So you can imagine the amount of time and context and how much they understand India customers or India, financial services business. But maybe we'll start with you. What is the story of you found each other through Google?
Well, in 2006, I was doing a biometric payment startup for financial inclusion. And I was not the tech person, so I was struggling a lot to build the technology that I was trying to do. And I was researching heavily. Google was the only source of information. Back then, I was in Ahmedabad, not the most known place in that time for doing startups. Now, it's a very different reality in Ahmedabad. But Google was my only resource, and just trying to find out who else was doing financial inclusion in India or globally. And that was a Google search. I landed up on Anish. There was a New York Times article about him doing Cash Next. And in those days, didn't know how to connect, so found him on Orkut, sent him a friend request and told him that it's a business proposal. And Anish was amused, I guess, that normally Orkut girls reach out for dating or for whatever, and there's this person asking me for a business proposal. So yeah, startups and conversations around finance, about fintech. It was not known as fintech in those days, but that's what got us started.
And this was which year?
2006, 2007.
So
and
related question though, how did you manage to get into New York Times?
The financial inclusion startup which I was doing, Cash Next, that operated on a unique technology called near sound data transfer, which uses sound technology for contactless payments. So the objective was to turn a feature phone into a contactless payment device. So we developed the technology and did a couple of pilots in India. So one of those pilots was picked up by, because it was along with CGAP of the World Bank. And then Hindu carried a cover story in their Ergo newspaper. They had a Chennai special edition newspaper. And then I think from there, Times journalists read the story and then that picked up.
So when in 2006, 2007, nobody knew about fintech and payments, you were doing a sound-based payment system and you were doing a biometric financial inclusion payment system. That is like, I think entrepreneurs have to understand that, the amount of trials, amounts of things that you have done before reaching to Open, right? It's not easy. Like people think it's like, you can get success in like 3 years. It does not happen like that. That's a very important story, I think.
Probably the ecosystem has matured now, so at that point of time the ecosystem is there, so it's much more easier. Entry barriers are lesser probably.
There's a lot of knowledge available. There's a lot of community strength that is available now. Fintech is, as a community itself, you've been running it for a while, so there's a lot of ecosystem connects and people where you can reach out to folks. So it's become more easier now. So it is possible to build a fintech and be successful in 3 years or 5 years now.
Right.
But back then when we were doing it, yeah, it was a longer struggle.
Well, there are lots of challenges of building fintech companies, but we'll come back to that. I still want to double click on your founding journey, especially of Open. So I want to know like who are the other co-founders and how did you find them, and just the little backstory of how you guys started Open.
Yeah. So we have two co-founders. One is Dina Jacob and Ajish. So Dina is the CFO and Ajish is the CTO. Dina has close to 20 years of experience working with startups. The initial 10 years she was with research companies like EY, and then she was the CFO of Taxi for Sure, Tapso. And Ajish happens to be my brother, and he joined me right after this college in 2013. My previous startups, which got acquired by Citrus, then he moved to Citrus. He was leading the SME engineering team, then PayU, and then we started Open. Maybe like
An interesting backstory about Dina. So you mentioned we have done a payment hackathon together. One of the teams participating in the hackathon was of Taxi for Sure, and the solution they had developed there, they went and pitched it to the founders, and Dina was part of that team that listened to that and connected with us, and we were, they became clients for Switch. So that's how I connected with Dina, and then when we were starting Open, many years later, we reached out to Dina to see if she would be interested, if this idea works for a CFO, to understand that. And yeah, she completely bought into the idea and to our journeys as well.
Yeah. I want to mention something there, which is usually often not talked about, that when we were trying to find out a partner to do the hackathon, I spoke to 2-3 other companies, I'll not name them, big companies, and I got very lukewarm response. I think this whole thing about, open to doing things, helping the ecosystem, that was the thing I was really drawn to when, Anish and Mabel said that, okay, we will help you out. And really, without their support, I don't think that hackathon would have happened. In fact, the sponsor also came by, I think Atom Technologies, he very readily agreed to.
Right.
So there are these incredible people in the ecosystem who are ready to help. It's just that you have to ask. And definitely Anish and Mabel are one of them. So thank you for doing that.
Thank you for saying that.
Yeah.
I also want to know, how did you decide on that, you will start doing SME banking? How do founders in general and specifically you guys decide on the focus areas?
So while I was with Citrus and PayU, we used to deal with a lot of SMEs and startups. And one thing that keep coming from most of these founders is that business banking is broken for them. So that's a time when probably digitalization has actually happened. There is a lot of progress that has happened on B2C side or consumer banking. But when it comes to business banking, everybody was like saying, so we try to understand what are they really saying and what is the problem. Because for me, I always felt that the Indian banking is much advanced when compared with their international peers. And I was pretty much happy with my consumer banking apps. So I thought that would be the same case. Even as an entrepreneur, I had not had too much of this pain points. But then going deeper into probing deeper, we realized that what they're talking about is nothing to do with banking alone. I mean, it's not about banking alone. As a business, you have to deal with multiple different systems. You have a Tally or a Zoho for accounting. You have a payment gateway like a Razorpay or a PayU. You have a bank account, then you have payroll software. End of the day, you have to actually, this system doesn't talk to each other. So you have to actually reconcile all of the systems to manage your receivables, your payables. And that's where they feel banking is broken because today banking system doesn't connect with each other. So that, we thought there's an opportunity for us to solve for it, because banking is your base where all your money comes in and money goes out. And if I can actually track that every penny that comes to my bank account, from whom, for what purpose, why it is moving out, for what purpose, then I can actually automate income, expenses. And if that connects with your rest of the systems, then I can automate finances. So using current account to automate finances was the idea that we were toying around. And I also researched a lot in the global markets. Even at that point of time, when Let's Talk Payments was also a huge source of research info, but found that there is many people who are trying to solve, many startups who are trying to solve for this in different parts of the world. There was Seed in the US, there was Tide, there was Holvi, and that's where I came to know that probably neobanking is the way to solve for it, where you offer banking services without a banking license, but ultimately bring all of those disjointed financial systems together in things. So that was the whole idea behind getting into business banking.
And other than, I think, banking was the initial and the first product. Now I think Open has a few other products also. So would love to know what other products has already been started, and maybe how it is helping the current set of existing client sets.
Right. So I'll talk about the suite of products which Open has. So the good part is that we never changed from our core business model or the core problem statement that we were actually trying to solve for. Not the business model, but the core problem statement, which is about financial automation. So that continues to be our primary product, where we directly offer the product to SMEs, where they can actually come, link their multiple bank accounts, link all their different ERP systems, connect them together, and then automate the receivables, payables. Now, while we build this, we have to build a lot of partnerships with multiple banks. Today, we work with close to around 12 out of the top 16 banks in the country, right from an SBI to an HDFC to Axis to Kotak or ICICI Bank. Now, while working with these banks, a lot of these banks were also looking for strategic partnership, because they also see value in this product, because banks were offering a plain vanilla internet banking solution to their SMEs, and today banks realize that banking transaction needs to be in the middle of the workflow where an SME business transacts. So that led us to create, find an opportunity to white label our solution to the bank. Initially it was co-branded model, where banks would co-brand Open under their brand name. They would then bundle it along with their current account. So we created that as a separate business unit. And later that led to two of the largest banks, HDFC and Axis, now offering it as a primary business banking platform to their customers. HDFC just went live a few weeks back under the brand name called BizExpress. Axis Bank calls it as Neo. So that is like one of the business unit verticals, the second verticals. The third is that we built a lot of infrastructure either by connecting banks to Open or by white labeling the solution. That leads to access to a lot of this infrastructure. So, and we realize that today, like, getting access to this infrastructure is a challenge for a lot of this fintechs as well as non-fintech. So we build that infrastructure and then we start exposing it to other fintechs. So these are the major product suite, and as a part of the primary Open platform, we build a lot of functionalities. For example, we built a payment gateway. Very recently, we got a PAPG license from the RBI. We did a cross-border sandbox along with the regulator, the RBI, as a part of the RBI sandbox. So this is what the product suite of Open is.
So, related question actually. So, and because this podcast is for a lot of fintech entrepreneurs, other entrepreneurs also, I want them to learn a very key lesson, because I know a little bit of, your history and all of that. Basically throughout this, there will be a lot of rejections, right? So, for example, when you were going directly to the SMEs have this big issue of trust. So, your first 1,000 customers, what happened there? What kind of hurdles did you see? And similarly, on the banking tech side, Indian banks are not easy right, to sell to. I want to know, what are the problems, challenges, tech hurdles, legal hurdles, procurement hurdles that you faced, if you can share on both the sides.
Right.
Finding the right banking partner first itself was the biggest challenge that we found, because it was easy to say that, I'll have a bank power this entire thing, but then finding the bank who would agree and then who also has the tech layers available was the primary challenge. And then even the version of Open that went out, or even the beta version of Open that went out, it was not about connecting your bank account or connected banking as it's known today. It was a lot about, you are able to load money and then able to do transactions using that. And, what we would see was money would come in and then immediately money would go out. There was no retention of fund or anything in the platform. So those are things that got us thinking that, what is it that the user needs that will enable him to retain funds on the platform? How do we build that trust? And banking on the layers of the bank, the trust layer that the bank builds, was the only way to solve for that. So, as long as he's able to access his money through a bank ATM or through a bank branch, those kind of layers were required, and which made the current account layer very inevitable to the journey of Open.
So,
just probably to add, and for the benefit of the community, I think as Mabel mentioned, the first challenge was getting the right banking partner, and
How many rejections did you face in that?
I think almost every Indian bank, every banker whom I knew, I thought it was easy. I could have walked up to them, and because I know them, and they would give me the APIs. But unfortunately, I mean, they were hand tied they were tied by different factors. Small startup regulations was not very
And
clear.
how many months or years the first go live would
I
have
think
taken?
11 months it took us to get the first banking. So one thing which I realized is that banks are in Mumbai, so you need to actually, I got Satyam, my colleague today, he heads the entire banking team, but got him early. And we both were stationed in Mumbai and keep on knocking the doors of the bank. And it was ICICI Bank, which is a first bank that actually came on board. So it took around 11 months. Everybody told that, okay, now we are stuck without any bank, you can't move forward. A lot of people were saying that, okay, maybe you change the business model. But we were very persistent. And a lot of banks where we presented our solution, later that all came back after 2 to 3 years, because whenever they were thinking about the solution, they knew that, hey, you know that this open has came and presented, so it should actually approach them. Now coming to the second part, getting the first 1,000 customers or the first 5,000 customers. So the moment when the first banking partner went live, which is ICICI Bank, they also realized value that, okay, this product is actually giving convenience to the users, and it helps them increase the average deposits per user. So the bank also started distributing the product
Marketing.
to their branches.
Oh, nice.
So they actually give the opportunity to work very closely with the sales team of the branches across 21 different regions. And when the bank is selling something to a customer or saying that, okay, hey, along with your ICICI bank account, you can actually do that. That adds a lot of trust and value. So that was our initial model, and that's where we found that, okay, if we were a standalone, neo banking platform fintech, we would not be able to get to this customers. And initial customers were that's how we got the initial set of customers.
So two learnings from there, just to quickly. So one, persistence, right? Like you can't crack an enterprise deal. Not just banks, in any sector. I think it's very hard to collaborate with larger companies, because they have a lot at risk. So they will go through everything, from IT policy to, so keep going. It takes 11 months, but there is light at the end of the tunnel. Secondly, I've seen that whether it be OneCard or Kiwi or you guys, right? It's very important to get that one partner in a way that they're fully aligned, and they will put their sort of force behind the product or the solution, just like how ICICI started marketing your solution.
I mean, just one more point I would add. I don't know whether it is relevant today, but it was relevant during that point of time. That's when I can name when I met with one of the banks, I think RBL Bank also. So casually we were interacting with this thing, and the challenge which bankers used to face during that 2019-2020 period was that everybody seeing what's happening outside India, Europe and US market. People who are just out of college, people from the IITs, they would come to the bank and say, like, give me the APIs and I'll build the bank. I mean, it was a little arrogant way of reaching out to a bank for a partnership, and even saying that, okay, banks are bad basically. You have bad user interface. You don't understand the consumer things. We'll build it for you. That itself, a lot of bankers never liked. So even you need to also understand, at the end of the day, banks are your partners, and banking is not just about the front end UX that you build, right? There is a lot more. I don't think any fintech can actually, most fintechs are not capable enough to actually run a bank. I mean, the regulatory and things like that. So those were the other things. Like, so in your industry, when you are actually approaching your partners, just also understand, it's not that they are really bad, or they are inferior basically. That's why it's an opportunity. So
fantastic point.
And I think, just to add on more point, because most of the, I think, companies, specifically fintechs, right, they look at kind of a banking partnerships, or it is some product to go live with bank as a very, very key milestone, right? And you mentioned, 11 months of persistence. I've, heard couple of journeys where people, kind of try for maybe 2-3 months best, and they say, okay, I've received 5 rejections, maybe I'll go back and change the product. And then come back again after 6 months, and they keep running into those cycles over a period of, let's say, 1 year, 1.5 years, or 2 years. So any suggestions or learnings for the founders there in terms of what kind of exact product or what kind of exact pitch that needs to be there? Because I think banks is something that every fintech founder in the country looks, I want to go live with a bank.
Right. So firstly, you need to understand from a bank's perspective, what do they really look, right? They have a lot of not restrictions, I would say they have to actually meet the regulatory and the compliance requirement. A small mistake can actually cost the bank huge penalties, or it can even impact their licenses. We had seen it in some of the smaller banks where they lose the license, or that has to stop this thing, right? And then, so many times, like when a fintech approaches, they would not have been ready with certain things on the compliance side, on the regulatory side. Third, you need to also, it needs to add value to the bank, right? Either in terms of acquiring new set of customers or deposits or increase or some value that you need to provide. Unless you are able to meet that part, even banks will not really think. What I've seen is, like, if there is actually a pain point the banker faces or the bank faces or the business team faces, you meet them with a solution. They will actually encourage you. They will work with you. Most of the times people go with some fancy ideas and then they try to, or something which really works for them, but for the bank there is no value proposition. So that is one part which probably fintech entrepreneurs should look at it.
Makes sense.
So with that, maybe let's talk about the broader fintech opportunity in India. There was a recent podcast, Bhavan Turkia, Karthik Reddy, and a few other folks, and Abhay was telling me earlier that basically they said that there is no fintech in India. There is fin, which means regulated entities. Everybody is getting a license, and then there's tech, which is like TSPs and all that. I think in a way you guys defy that, because you are both. You are actually fintech, right? Because you have a PGPA license and all of that, but you also are acting as a TSP in some cases. You're also bringing it together in some cases. So what do you say about this whole thing, fintech, fin and tech separately?
Right. So it's like the way the word unicorn is coined, right? It's an imaginary word that has been coined a few years back, right? For the merit of like identifying a sector or a industry, right? Or startup specifically. I think fintech, fintech for me is not a separate. It is categorized for giving more attention to those startups operating in the financial services space. Because if you really look at it, there was always like financial technology companies, right? From in India itself, companies like FSS to Worldline, or companies who provide ATM solutions, payment gateway, or even the companies which has been providing like core banking systems. They are also technically fintech, right? Financial technology providers to the banks. But yes, as the global phenomena of I don't know who coined the term fintech, or where it always existed, I don't know. But with that, wherein new business models started coming by the collaboration of the banks and startups, and many times like the startup offering service which is offered by a regulated entity, and probably that's where fintech got more fancier. Where earlier it was more TSP kind of a thing. Now I feel like fintechs will always exist, because one, the regulator is also allowing a lot of like technology companies to work on specific products or areas, whether it is payments, whether it is cards, cross-border. And I also must say that we also have one of the most progressive regulators globally. And by the time when we were running the hackathon in 2013, that was a time when probably, or a year back, was the payment banking license was introduced in India. Few years back, it was introduced in the European market. So within 2 years, the regulator actually brought it. I'll come to the regulation part a little later. I also feel that whatever we complain about the regulations is because the regulator wants to protect the end consumer at the end of the day, and that's where they bring in this regulations kind of a thing. So I think fintech will always exist. It's just that a lot of people misinterpreted what can a fintech do. A lot of these gray areas were always taken as, okay, this is a gray area, so it means an opportunity for that. Now the regulator has made very clear that, okay, if the regulator has given license or regulated certain things, you can always do that things. Anything on the gray area, it's a strict no kind of a thing. Now look at the opportunities that, today, as digitalization actually has happened, even new things like generative AI, everything is happening around. Banks also need to offer those kind of features, functionalities, value, whether it's for the internal processes or new functionalities, etc. And they can't build it themselves. So they're always looking for strategic partners, either as technology service providers or even distribution as well. So I think it's a larger opportunity for anybody or any entrepreneur who's actually wanted to tap into the financial services sector. There will always be enough opportunities.
Right. So, given that you were focused right from the beginning on SME digitization or MSME segment, and I'll say something a little controversial here, but in my experience as an investor, And as what we are doing at Medici, one of the things I've seen is SME, very hard space in India. In fact, one gentleman, without naming him, he said, MSME is where startups go to die. It's a graveyard. And there are a lot of companies who have faced struggle because till the time the product or solution is free, people use it. But then the minute you start monetizing it, start charging for it, we have seen incredible amount of difficulty. And rightly so, because our MSMEs also have very thin margins. They are running difficult businesses. All those things. What is your take on this whole? Like, can you actually build a sustainable, profitable business selling to SMEs, especially technology product?
Right. I think probably the definition of an SME would matter a lot over here. I completely agree that when it comes to the long tail set of MSMEs, I mean businesses with up to like a 2 to 5 crore turnover, it's very hard to make money out of this thing because they are not used to the subscription based businesses. And even if they pay subscriptions, it will always be like 2,000 rupees or 3,000 rupees a year, which may not really help a fintech or any company or a SaaS company to actually serve. But the good part is that companies which are like mid SMBs, right, which is anywhere above like a 5 crore plus, they have now started adopting digitalization, whether it is implementing Salesforce or a HubSpot or a different ERP systems, etc. And they have a lot of these pain points, and they realize that a lot of their pain points can be solved through digitalization, and they're willing to actually pay for it, right? So that segment, Open actually focus on from that mid SMBs and more, even though in the initial 4 or 5 years we've been focusing a lot on the long tail segment as well. Now one of the things which you're also seeing is that if earlier the average revenue maybe like if it is like a 3,000 or 5,000 rupees a year, now it has gone up to 1 lakh when you're actually looking at like a per month. I'm just talking about the 5,000 was a yearly revenue, and now suddenly we're looking at when you're actually looking for like a mid SMB onwards. Now, the specific advantage that Open has is the distribution. Today, we have like the major banks where we are the default entry gateway for the mid SMBs, their enterprises, and the long tail. They come on, and so we don't really have to really hunt for the prospective customers on the platform. That is one unique advantage that we have, and then we are actually sitting in the middle of their workflow of the workflow for the financial automation. So you're making a payment, it gets pulled in from your SAP or a Tally, we reconcile it back on that thing, and that's the value that we provide, kind of a thing. So we do believe that's a larger opportunity, but I agree completely that in the long tail, it's very difficult to actually, nobody has cracked it so far on the long tail segment. So when we talk about 61 million, I mean the numbers would have now gone up. Probably, I think very recently somebody was telling about
around 80 million MSMEs.
80 million. Somebody was telling me 100 million as well, because the numbers we've been quoting about the 70 million was from 2017. But 2 to 3 million is the larger mid SMB base, basically, where they have like a huge ARPU that can give to the SaaS companies as well. But India is definitely growing on that front. If you look at of companies like Soho and all, now the half of their revenues come from the India market. So the saying that Indian businesses won't pay for SaaS is completely wrong. It's just that you need to focus on the right segment which has the ability to pay.
Agree. So we have a portfolio company called Stage, which makes Haryanvi movies and TV series and all of that.
Okay.
And they have like a 1 million subscribers now. So it's very interesting, like what people will pay for.
Right.
Like entertainment, seems is a very... Okay, so on a positive note about the whole SME space, SME banking, I think the work that you guys started, today we are at a place where SME banking has improved quite a bit, right? From your direct efforts, from how you powered and provided the platform to the banks and the banks push and all that. Where do you think are still there gaps in SME banking that could still be fixed?
So I just want to repeat one part on when you talk about SME banking. Today, I feel like 80% of our SME banking is kind of like sorted, right? Most of the internet banking, digitalization, etc. The challenges that we specifically were trying to solve for, it is like the disjointed financial systems. How do we actually bring it together? Now, specifically talking from the banking front, what are the challenges? Still, cross-border is like a bigger challenge, like the tons of paperwork and documentation that you have to do when you have to raise funds from this thing, or an importer and exporter kind of a thing. Secondly, even on the lending space, while banks give OD facilities, but can they underwrite based on the other data points? While there are efforts being happening in terms of the open banking and OKIN and all of those things happening, I still feel like today, like if you know that, okay, or based on your Flipkart marketplace settlement or Zomato settlement, can a bank instantly underwrite and give them a 30-day credit kind of thing? So some of those pain points are there. Then cross-border is one other pain point. Treasury management is a bigger challenge today. A lot of, on the consumer side, we have seen like a lot of improvements happening where now consumers are moving money out of their savings account into wealth accounts, right? But on the business side, it is still like it's a lot manual operations, and lot of this current account customers, they have like idle money lying in, they don't know where to actually invest kind of a things, or even established companies managing the treasury. So these are like a few of the areas. Basically trade finance is another area. So I mean, there are like a lot of areas where in tune with what's happening around digitalization and the technology, probably there are a lot of areas to work
and
on.
these are all big areas.
Big areas.
Thanks for sharing that.
Each small of area is actually like, I don't know what's the size of it, but $1 billion opportunity, right?
So one last question on this particular product and ecosystem in fintech is that, so bank tech and infrastructure and API businesses, I think in the last 5-6 years after what you have done, what companies like M2P and others have done, there has been a wave of new infrastructure API companies in the market. I know in the matured markets where this cycle has already completed, people say 4-5 years of infrastructure API companies, and then there are consumer fintech company cycle, and then there is again because the infrastructure needs to catch up. And I just feel I don't know, like, what is your view on, is there space for more infrastructure API companies after there are like 3-4 dozen of such companies already in the market?
I think especially if you're looking India as a market, I feel like we don't have too much space. I'll tell you the reason. There are enough opportunities, but one is like there is a regulatory regulations right now. I mean, there are only few companies which can probably operate within the regulatory guidelines, right? And a lot of regulations in terms of the card issuance, everything had impacted a lot of this companies. Second is a business model. Every infrastructure company today is like focusing on either a revenue share on the card issuance, or it could be from the payments, either because of regulatory reasons or because of the saturation. Basically that has become, so you need to figure out like alternative source of revenue models or business models. That does not really come up well, or nobody is able to actually innovate. And banks on the other side has been getting much more stronger on the infrastructure side. If you really look at like banks like an SBI and their developer portal, and much better than some of the fintechs developer platforms. I mean, we are one of the beneficiaries of integrating with an SBI as well, and we keep seeing more and banks wanted to expose their APIs, and they would partner with TSPs. That's another opportunity where companies, because the legacy core banking companies or the bigger companies, they were not able to create a proper infrastructure platform for the banks, which they can actually expose to their partners. So there are enough opportunities, but direct to companies, because there are you have a limit to which the number of companies which now consume fintech services, unlike earlier that what we thought, because we are talking about embedded finance, that every corporate now would be embedding finance into one thing. But it always limited to this use case of now lending, card issuance or payments. But if you really look at outside of India, there are more use cases. So because of all of these challenges, if you're focusing only on India, I would say that we may not have too many opportunities, but building it out of India, where India is a smaller market, and looking at it globally, there could be more opportunities.
Yeah. Actually, let's change the track a little bit. Question to you. Given you guys run product folks, product community, and there's 1.6 lakh members in it. From your lens, how much of fintech, what is the percentage of the membership and activity, and what do you see? Has it increased? Has it decreased? Can you share some?
So I think roughly I would say more than 30% of the members that we serve are from fintech or financial services background. And overall, I think activity has more or less increased in last 2 years, primarily because many of the companies who started with acquiring the customers first model have now moving into revenue first models, where lending is one of the biggest ones. So many of the folks that we now knew that used to work in kind of product-led growth kind of environments, now they are doing and building banking infrastructures, lending infrastructures for the companies. So definitely, I think within the community, also within the people as well, there are a good amount of people who have interest in fintech, because there are so many areas and opportunities, right? In terms of connecting with the bank, providing specific set of APIs, doing identity, doing what Open is doing, right? Connected banking, business banking, which is one of the toughest so far, compared to consumer side of things. But yeah, good number of people, and most number of people, matured set of product audience that we see right now in India is also from the fintech backgrounds only.
Yeah.
Yeah. Maybe next questions, from the product and fintech side, as I'll take towards more sort of a funding and how to manage the investor side of perspective, right? At Open you have raised millions of dollars of fundraise over a period of last few years. So how has that journey been from, let's say, seed to pre-seed to currently what you are at? Any sort of a specific, let's say, benchmarks or goals that you've had and then you raised, or how has each round of journey can been, if you can give in maybe 2 to 5 minutes?
All right. So the journey of Open was a little different from our previous stints, which was mainly bootstrapped. All our earlier startups were bootstrapped. Here we started out with angel investment from our ex-bosses, Anish and Mabel. So that was a good start. You get a head start somewhere. So that was one part. Secondly, we've been lucky to find investors who bought into our philosophy of what we want to achieve with this company, and not just people who are there's no harm in being a transactional investor, but somewhere the folks who came into the journey of Open were also strategic in our growth. Like for example, Visa, very strategic for our partnerships with global banks. The other ones who take us to a lot of banks abroad for the white label implementations, right? So same way with the way Tiger came in, or BNext and 314 came in. There was a lot more support we were getting from, apart from being just transactional investors. Like 314, we just had to reach out and say that, oh, I want to research a little bit about this segment, and they would quickly put up a team and give us some insights about what it is, how to do the pricing properly and all of it. So we were lucky that way to have investors who were willing to work along with us in the the company building, the product building phase. The other thing that happened in Open was also back-to-back rounds. So our series A and B were back-to-back rounds. Our series in C and D were probably 8 or 9 months apart. So, and we were very prudent on how we are spending. So that always ensured that we had a good 36 months runway at any point of time in running this company. So those are some bits about about how fundraising for us worked out over the past 7 years of building Open now.
Yeah.
Just adding to that one point which you asked, what was the fundraising and expectation, what you planned initially, kind of a thing. We never, all of our funding except probably the Series C funding was all inbound thing. We were starting with the initial thing. Of course, I know Amrish and Signzy was just talking about the idea, and then he came up with the check. All the other rounds basically was people approached us, maybe because of the media articles or people in the network, they came to us, and we were also not had any plans of okay, we should raise this much, or even both from a valuation perspective or even from the amount of funds that raised. Series C is the round where we actually reached out in the market. We had investment banker, and with that time we wanted to have strategic partners, and that's when Google came in along, and Temasek and Google came in together as well. So that's been our fundraising journey.
And a lot of folks, invested in us even before, for the pure, it was a bet on the founders somewhere, like Unicorn India Ventures, when they did our pre-series A round. The product was still coming onto the beta stage. It was, not even a ready product proposition at that time. So, they took a call on us, much earlier. When Vaibhav came in through AngelList, he ran a syndicate, and now he does Better Capital. That, for him also, it was a bet on the founders. Listen to the founders, what their passion is, and then taking a bet on that. So we were really lucky in the journey of Open.
I think just one small part I just wanted to talk about in this thing, in the fundraising part. Amit was supposed to be one of the initial angels.
That's always been my biggest miss. That basically shortage of capital, and I had not started really investing. But when Anish came and we were sitting in the office and we were talking about this, I was like, this is very interesting because what we were doing at Medici, the killer application of that data on startups was actually investments. So that actually led a lot of thinking within, but unfortunately, because there was shortage of capital, I missed that, and that has been my biggest miss so
But
far.
I think indirectly, Amit has also been.
You've connected us to so many folks.
For example, I'll just take an example of Chirant, who was earlier with Let's Talk Payment, Medici, and connected. And Chirant came with a very small investment. So,
but that money meant a lot at the time that we got it.
We initially were even looking at should we even take it that not small in that sense, but at least from the requirement perspective kind of a thing. Then after the investment, he connected to the AngelLess Syndicate. That's how Better came in. And then along with that, Unicorn, India Vengeance, Recruit, all of them came in. So one thing is that even a single rupee actually matters a lot and is very important for a startup entrepreneur. Things which you really feel, okay, I should only look at in a particular quantum of investment. That I think investors should be more open of accepting even smaller. It's not small amount. It's actually much more than the thing. If that small check would not have happened, we would not have the thing. So we're really grateful for investors, irrespective of the capital or the value they put in.
So one more very interesting thing I'll tell you, and this is very interesting for the audience also, that I think because of Open, there are at least 4 or 5 VC funds which exist today, or which have grown. Without naming them, do your research. But this single company has led 4 to 5 VC funds in the country.
Nice. One thing, just to add on that is how do you also go as a founder? How do you go also about investor relations? One is obviously when the investor is already onboarded, they've already invested, that side of investor management. And one is, let's say, for example, for Series C, you mentioned that, you did the outbound. Do you constantly keep in touch with, let's say set of investors, set of strategic investors also that you think will be important? Because typically, what I have seen that, founders sometimes do is that they don't constantly keep in touch. When they feel there is a requirement of the capital, then there is an entire, life cycle of, 6, 9 months, 12 months, where they do the outbound, then investors probably start to evaluate the companies or the business again, and then it happens. So for the fundraise perspective, how important it is to constantly keep in touch, if it is important or not?
It is very important. I would say that you constantly should be building your network as an entrepreneur. That's the only thing that you're supposed to do. You have to build your network, and it could be to investors, it could be through the ecosystem, through other founders, through the media. Right, you constantly need to be out there building these networks, because all of this is required for getting you and pushing you forward. Many people underplay making news, and I'm someone who takes care of marketing, right? So this is something that I keep telling all the founders, that make some noise. You're doing your startup, you would be doing it for 10 years, 15 years, right? In that time, if people don't know you exist, what's the whole point? So don't shy away from, when I become big, that time I will do it. Don't park it for later. Make some noise and celebrate even the small wins that, but doesn't have to be some funding announcement that you've done, but then maybe you've acquired and your product is working for really great for a certain segment of users. Even that is worthy of making noise. Entrepreneurs don't tend to celebrate smaller milestones. They just wait for the bigger milestones to happen. But if you build that habit of celebrating even the small things that happen, even if it is just opening a new office or hiring your first team member, if you build that habit of celebration inside, automatically you are setting yourself for success, right? You're attracting more, the law of attraction and the power of subconscious mind and all of those things put together. Secondly, media is very, very important, because any investor typically would be getting say 300 to 500 pitch decks in a particular month or a particular week, for that matter, to evaluate. What makes your pitch deck stand out from, it is always a recollect to something that they would have read, or maybe they would have met you at an event, maybe someone in the ecosystem would have spoken about you, right? So unless you've seeded and built that relationship, no one is going to speak about you, right? So make that effort, build your network, and constantly engage with prospective investors, with the community, with the ecosystem that is around you, with other founders. Like, I have my go-to WhatsApp group for everything on fintech is what Amit runs, which is fintech.org. And for anything about women and entrepreneurship, we have a women founders group that we, always go back to for our knowledge sharing. So this is not something that you have to do as a part-time. It's your full-time thing. Building your network is a full-time activity.
Basically, thought leadership is what you need to do. It's not about like networking alone, going and meeting the VCs part of it. How do you actually make prospective investors curious about what you do and the things? I don't think anybody has actually gone and we'll always say that okay, one founder will introduce and then you can get funding. I don't really believe in that story. Maybe it can actually happen, but that's the cases where the investor would have actually researched about you or that segment and feel that okay, this guy has experience. But for 80% of them, let the investor read about you, or either through getting a feedback from your customer or a partner and reach out to you. Second, you asked about investor relations part. So one is to have a founding team member. So in four of us, we have actually divided the responsibilities where I mostly take care of products and banking alliances. Mabel takes of marketing, Ajish takes of technology. Dina is like everything finance, right? Whether it is even dealing with the existing investors, managing the business finance as a function. And till around your Series C round or up to a Series B round, the founders are the story. It's not your product. So you should always be there on the front foot, meeting investors and talking about that thing. And a lot of people actually hire investment bankers at a seed stage, Series A stage, Series B stage. It won't work because even the investors would like to see how the founder, what is the founder's vision, or how do they actually see through the story kind of a thing. I mean, this is probably some insights from our journey.
Yeah, super, thanks. Yeah. And maybe one last point on fundraisers, that current fundraise market 2024 or even 2023 is very different from what 2021, 2022 used to be. So advice for maybe fintech founders who are raising funds in this market in terms of what they should know about, what they should take care of going and talking to investors.
So I think 2019-20, that period was probably like the .com time of 2000s, where anybody with a fintech idea would used to get funded easily. Now, obviously, last 2 years, the entire sector has because of whatever is happening around globally and the macroeconomic situations. Now, definitely the fundamentals has come back basically. So if you are really profitable or if you're a business which can actually generate cash flows, not only on the short term, but what would your business translate into 3 years from now? How do your business, change with what's really happening with the adoption in technologies as such? Third is fintech probably may not be now a favorite sector because fintech, edtech, a lot of the sectors, and this keeps on changing, right? 2012, 13 it was e-commerce. Then fintech, edtech, all of this thing, right? And now with generative AI and a lot of these things coming in, it may not be your the .com category, these things where you can raise funds just with an idea kind of a thing. But it's also good in such a way that people who are actually building it fundamentally right and who are actually generating, you're able to actually demonstrate that the business is sustainable and viable, they will be able to actually raise funds. For the newer guys who are just coming into, maybe looking at, there are a lot of untapped areas and opportunities where probably you don't have to wait for the 3-4 years basically to generate your first revenues. Focus on business models basically and opportunities where you can actually generate cash flows right from the beginning. So that's one change we are actually seeing from now and before.
See, 2021, 22, right? Great years for fintech. Raised a lot of money, and I think after that the tech meltdown happened. Everybody, I don't think anybody is not having this conversation in their boardrooms that you now need to think about building a sustainable, profitable business. But as founders and as for Open itself, how did you then started thinking about, for example, I know in the initial years you were very focused on growth, right? Let's get as many customers as possible. How does this change which is happening now, how do the founders prepare themselves? And is it about, pushing the sales guys more, Is it about saying no to certain products and services? What all does it take to now, reach to a stage where now you can become a profitable company and then IPO one day? I want to know like what is the thinking in the background?
Right. So there are many aspects that goes into a startup journey depending on the time period where they operate, right? 2001, 2005, 2006, then there was 2016, then right now the period which we are talking about, right? And there are like a lot of, and it's also related to the global sentiments or what's really happening, right? Many times, like, I think everybody it's an unpredictable thing, right? From an investor's perspective, when you are building a product, maybe if it is not focusing on growth, will they actually miss out on the next round of funding? Same could be the question that a founder would be having. Or third is like, okay, maybe I want to become the market leader. I have to probably get into 30% market share. So I may need to build more products or probably I have certain strength where I can actually build more products. So that leads to like, you hiring more people and that at a time probably at a higher cost of getting these resources because when the market is flush with funds. Now, when these situations actually change, everybody started adapting to that, right? And many times I think it's actually a good, because sometimes like when you're in this journey, you also probably doesn't realize like this thing, you go with that flow and then suddenly like you realize that okay, let's actually look at like it in a different angle, right? Now, generating revenue, it's not about like, increasing the sales guys or going after the sales guys alone, right? It could be when looking at like, is there certain businesses probably where you need to actually focus your energy more, wherein you have like high margins or there is an opportunity to double down on that particular business, right? Is there like, cost that you can actually save up kind of a thing? And obviously like, can we really look at like the sales thing, or can we really look at like pricing on a differential model, etc. So this actually gives an opportunity for entrepreneurs to actually think a little differently. It's actually a trigger for you to actually think differently. I think it is a good thing that has actually happened in the last 2 years for a lot of founders, including us, where we are actually now able to look at things with a different lens, and the same with the investors as well as the ecosystem as well. The thing is that apart from fintech, I think not the worry, basically I feel like now the time for the next cycle to start, maybe with the generative AI and the wave kind of things, and you will actually see a lot of them getting funded just based on ideas. Then they'll go to the bubble cycle, and then so this will keep on repeating in the history basically.
Any specific one or two examples you can give that this is what we did, to make sure that we can get into the path of profitability?
So one is like when we looked at like our real strength was like distribution channels which we're doing, and some of the larger banks where we're actually able to deploy our solution as their primary SME internet banking platform. So we realized that that's a huge distribution channel. So how do we actually focus more on that part? Second is like focusing on the mid SMB and the larger enterprises where the ARPU can be increased. We reduced our focus at least for the next initial few months or few quarters on the international markets, etc., because that takes away a lot of your founders' bandwidth and things like that. So these are some of the areas which we have implemented on thing. Also, the good part about is that when it comes to the cost controlling right from day one of open, and a lot of credits that to Dina as well, we've always been in control of like what we spend in terms of our burn. Our burn has been extremely low when compared with to a company of our size. We always, as Mabel mentioned, ensure that there is a 36 to 40 months of runway left in bank at every point where we raise funds, and even today for that matter as well. So that's a kind of like basic hygiene at least, and Dina has been very strict and sometimes like we feel like challenged like okay can we actually spend on this particular technology or this thing. She would say no. So those are it's always important to have that diversity in your founding team as well.
I was going to ask that you guys are so nice. I don't see you saying like very strictly no to somebody. Who is the person who does all this? It looks like
Dina does, yeah.
Very interesting. Related question actually. So you said that you have decreased your focus on international expansion. Anything on acquisition side? You have done 2, I believe, right? Is that an area of focus going forward?
currently we have enough things on our plates to implement. So that's what we've been working on the last 6 to 8 months. So currently we are not planning for any acquisitions, at least for the next 1 year. But sometimes like an acquisition is also planned for us. Basically, we something strategic comes up and then you find the synergies, and that's how you actually go with the acquisition.
Actually, one thing that entrepreneurs can learn a lot from you guys, right, is that when you are starting up, and I don't want to ask any sensitive thing here, but when you start a company, you're thinking about, the first few lakhs or, like a crore to reach. Then you reach into like tens of crores of revenue, and then you go into hundreds of crores of revenue, right? How do you, what are the things you start thinking about and doing as you go through these stages?
I think the first thing is building it. First thing is getting the product right or the product market fit. It's not a one thing. I disagree with all the standards in that you get the product market fit when your initial set of customers like it and there is a need, and then you scale up. Because as the product scales, as the customers grows, basically and as you get more competitors, you are challenged basically, because you would have been the first one to actually find the opportunity and build it, but then a competitor comes in, they offer it in a lesser cost kind of a things as well, right? So then you have to diversify, right? So it's a lot of strategies come into play in building startup, and fundraising revenues are just one part of that things. How do you actually keep up with that strategies? How do you actually respond to that part? That's where for every round or every time, that's what sometimes you have to actually pivot from certain strategies, etc. That's where a lot of founders' energy and efforts go through. Otherwise, you may become obsolete today, because a lot of things are commodities today. Even when you're talking about banking APIs, you probably are the ones who actually convince the bank to build that APIs for you. But then it becomes like a commodity where XYZ can actually also launch this thing kind of a thing, right? So constantly this type of things challenge you on this thing. And then there is especially in the fintech industry, there could be compliance challenges, regulatory challenges, etc. So focus more on how do you actually still keep relevant for the consumers, for the industry. Funds will come automatically, or the capital will automatically come if you get it right. Initially years, yes, when you are actually doesn't have anything to show, probably you have to build your story, you have to this thing to raise capital. But over a period of time, definitely this becomes thing. And then after, definitely as a fintech, as a company that you have raised funds, basically, then you need to ensure that you also give the right type of exit back to the investors, basically. So that's the next journey that you need to plan for your company.
Okay, so maybe we should switch gear and get into some other open-ended questions.
Sure. So the first question, right? I mean, and you mentioned that you spent good amount of time in Bombay, right? Any thoughts on why, let's say, not setting up open in Bombay as a headquarter versus Bangalore? Was there any thinking in that?
Or Ahmedabad?
Yeah, or Ahmedabad.
Bangalore, so we moved to Bangalore to do startups because of the ecosystem that was there. At that point of time, Bangalore was the only place. And somewhere the city grew into us and it became more like home. And even when starting open, we, for the access of tech resources that the city gives you to, the variety that you get here, those were some of the reasons why we always come back to Bangalore to do our startups. We've lived in Mumbai, we've lived in Gurgaon, we've lived in Hyderabad. I'm born and raised in Ahmedabad, but somehow Bangalore was a little, and at that point of time, this was a place to be in, and we just hung on to do startups. Now, a lot of these cities have also become startup centers. Like Ahmedabad, I went back in recent times, discovered a lot of things have changed. The ecosystem that is there, that has changed. The places where you can go and speak about startups, that has also changed, right? It's no longer Rambai Ka Kitli and Atira where you have to be doing those things. So definitely any city, but now we have based ourselves in Bangalore longer. For almost 16, 17 years we've been here. So that's why.
So I'll follow up with another one. So, obviously now you have, been 18, 20 years building startups. You have 100th unicorn of the country. It's a little bit of, like the way I feel after selling my company is a little bit of payback time, right? Like let's give back to the community. You have been doing that. You have been investing in companies. When you see new founders, there are two types, right? There are people in their 20s and then there are very experienced founders. Purely from an investor angle or looking at it from what works out better in this country, where do you think the pendulum is swinging?
It's changed. When we were in our 20s and doing startups, investors and a lot of people used to tell us that go work somewhere, get some experience, get some gray hairs, and then come back. I don't have anything to believe in what. And I think Anish and I were the ones who were waiting to turn 30. We were like, our 30th birthdays, when we cut the cake, we were like, yay, funding age. And then suddenly the people who were raising funds were like 20 something, just out of college, all the entire time that housing.com and all was happening. And then we were like, एक minute, what just happened? Were we a generation that were just either too young to raise funds and then too old to raise funds?
I think my take on that is, I think age has nothing to do with the thing. People can do great businesses when they're like 19-year-old, 20-year-old can build great businesses. Equally good for the 30 or a 40 or even a not late, even if at 55 you can actually start. It's all about like the way in which the entrepreneurial mindset and the passion. And I think investors, and we have seen success stories across all the levels. So just because you are like 40s doesn't mean that you will be like a good, successful, mature entrepreneur, or 20s doesn't mean that thing. So I don't think we should categorize between a 20 and 40.
One more question, again on, as both of you have been serial entrepreneurs, right? I mean, entrepreneur, founder journey, be it fundraise or bootstrap, right? It is always, challenging. You are always having some hurdles in terms of, running the company, scaling the company, growing sales and everything. So, some of the times what happens is very few founders actually start another business, right? Or maybe, sometimes maybe they'll early retire, or maybe they'll, go and, start working for someone else. But in your case, you have restarted again multiple times. So you never face, those kind of, scenarios or challenges in mind ki, now it's, something, probably we don't want to start up again. Or it is always the motivation that, gives you, maybe the next morning or immediately after the startup, this is, we want to solve for this. Like, what has, always kept you going for last 2 decades?
Yeah, so for me, I think running entrepreneurship is my way of like, creating products, and you get the satisfaction of when your actually product goes out. And I don't think, I always keep thinking to myself, like, what will I do if I don't have anything to do? So I've always wanted to ensure that, okay, I wanted to be an entrepreneur till the time I die, the last this thing, right? Otherwise, I'll get bored in life.
You don't want to become a VC?
No, it's a boring job, I think. Because when you're a creator, or when you're actually, and probably that's where, like, because of my passion towards products, that's what that's what. And I think Mabel probably maybe wanted to.
The quest for doing something different, that's what got us together. That's what keeps us at it all the time. The bug will never stop biting us because, we just can't put up with the mundane. Finding something innovative to do, something different. That's what, is a big part of mine and Anish's journey. Even as co-founders before, and then later as a couple, we did 2 startups and then got married. Right, so that salary in the bank kind of a thing, that settlement, that is not something that we craved for when we were together. Yeah, we had survival issues in those days. So money is definitely important, but at the same time, we're not happy just working for someone. We just want to build something.
And I think touchwood also would help from preventing a divorce, because you have something to talk about at home, interesting to each other.
At whom do you guys talk about fintech?
Only work.
Only work.
Work is equal to life, so it balances out. We don't have to look for work-life balance in different things. You're traveling also, you're working, you're on the job all the time. At home, and Ajish also stays along with us. So some couple of years back, 2-3 years back, he got married, and then he was very sure that after seeing mine and Anish's journey, he was like, I don't want a startup entrepreneur as a wife. So he very dedicatedly put an effort to find a doctor. And then there was so much of startup discussions that happened at home that we converted the doctor into an entrepreneur in the COVID time. So she's now doing a health tech startup of her own.
But I think you're not that boring at home, and it's work and life are part of it. So probably we are not able to differentiate. Maybe a lot of things we should talk about would be non-work kind of this thing. But
We used to have a saying in payments that when you get up in the morning, no user or no consumer thinks about making a payment or doing a payment. But in your case, it could be different. You get up in the morning, UPI has this change. Okay, so quickly about another thing. So consumer fintech, right? It's been a topic of discussion that because in India, it's very hard to acquire consumer customers, right, for B2C, and the cost of customer acquisition is very high. I'll use some of the VC terms. LTV is low, and there's all sorts of challenges. What is your view on consumer fintech companies in India?
Right. So, Amit, firstly, I don't have too much my understanding about consumer industry as a market, so very limited. This is while the same viewpoints that you would have about consumer, right? I feel like, yeah, there are challenges like any other industry. It's not about fintech, even e-commerce and also the cost of acquisition. Everything is like a challenge. There are still opportunities that exist in specific areas, which either some of the fintechs which are doing today will actually crack it. But compared to B2B, yes, consumer has, I think in the B2B side has more opportunities than the consumer. I mean, everybody knows that part of it. When it comes to lending, when it comes to wealth, for example, like, some of the larger, when you look at Siroda or like Grow, these are like, successful in its own right. So definitely there are opportunity. There will be like huge companies in the consumer space as well, and then there will be newer ways in which as the market evolves, newer ways in which you have to relook at the way in which you operate the business, because it was all about growth based models versus when you probably change the business models which keep evolving, there could be newer opportunities on the consumer side of it. But on the consumer side, mostly there's also the TSP led opportunities powering the banks or others. That's another way to look at it compared to probably directly launching products.
Yeah. I think from an investor lens, I can tell you that out of the 30 investments I made, almost all of them are B2B companies.
Okay.
And the simple logic was that lower mortality rate. So, you don't lose the investment in many of those cases. And in India, many companies have shown that these can actually become large businesses. 5 years, 7 years back, people did not believe me when I said like these can become, like we were seeing Marketa and those kind of companies become like $5-10 billion companies, and it's happening now. And for those reasons, right, lower, you are capped on the lower side and the upside is quite a bit. So it works out pretty well in B2B.
Yeah.
B2C, though, the outcomes are much larger if it actually becomes successful.
Right.
Like there's no comparison after that.
Right.
But there is like very few. Like the bar to become successful in B2C is very high.
Yeah.
Yeah. Next up, one question that I'll take is ki most of, I will say, right now the Indian fintechs that are trying to do, right, B2B or a B2C side has been on to trying to solve for Indian consumers. It can be from API, it can be from tech side, right? Very few companies, like yours, who is also now going out and trying to build solutions for the other markets as well. Do you think that those kind of requirements or those kind of companies will come more in the future, or you think there is so much to solve in India and still unsolved for that people should continue building within the Indian landscape?
I think there is much to solve in the India market. At the same time, there are equally bigger opportunities in the global market. It also depends on the strength of your organization or the idea or the entrepreneur, right? There are enough opportunities everywhere. In India, typically the challenge which I see as a fintech entrepreneur is that everybody is like playing around with the same set of like APIs. They would have a lending APIs, build a lending startup. They would take the eKYC, then the card issuance API, and then build something on. The real innovation is not, everybody is talking about there is a lending gap and I should do only lending part of it. But there are a lot more to actually solve, even on the fraud, risk management, backup operations. Even if you really talk to any of the banks or understand their processes, you will find enough opportunities. So there are like enough opportunities to solve in the India market, which I believe like new set of entrepreneurs or the fintechs would actually come up. At the same time, taking this to global or even identifying market. For example, Europe has a proper open banking framework, right? It's much more easier for an Indian company from here to integrate that, going through that certification for this thing, and then offering services at a much lesser rate to those companies in Europe or the US market, right? So there are enough opportunities in Middle East now. Saudi Arabia is like a bigger market in the Middle East as well, right? So if you really look at like the specific pain points in this market, there are enough opportunities. It all depends on your entrepreneurs or the idea or the skill set that you have, whether it is built for the global scale or for the India market.
Actually, you hit upon something which is my pet view about deep tech companies or things where it takes a harder effort and a longer effort to build something. And I generally see there's a lack of it, right? So, for example, Prove, which acquired Medici, is like they're a huge company and they spend a lot of time on getting the product right. That authentication product is like a deep tech company, right?
Okay.
And then you see what value you can take out of it. It's a multi-billion-dollar company growing very fast. And in India, I feel like the narrative has always been that fintech at least has been a distribution game. Like it's a distribution play. And now one thing which is changing is there are actually deep tech companies coming out of India in robotics, space and all of that. And then there are specific investors which have come up which are just funding those companies, right? But in fintech, I have not seen so far, and I just fail to understand why somebody would not spend time on building an incredible fraud solution, which may take 2-3 years to develop, or something around authentication, because there's so much of fraud happening. It's just that nobody wants to talk about it, but the fraud is rampant in India. Right? What do you think like we could do? Right, 4 of us, and the industry could do to bring out these companies.
I think one thing is like probably educate because what's happening is that narrative right now. A lot of fintech entrepreneurs are saying is okay, X got funded, X become a unicorn. Reading these newses, and then or there is a particular idea in Europe or a US, and then I will replicate that kind of a thing. So if you change that attitude, and if you really look at like deep diving more into deep tech, I'll just take a simple example. India has built a lot of digital infrastructure, right? For example, the ONDC as a framework based on a technology framework called Beacon, right? Now that can be applied across different things. Today, mule accounts are a bigger challenge which every bank goes through, where the bank accounts are given on rent to the fraudsters. They actually rent it out, fraud the customers, move the money, and then take it out, kind of thing, right? Even if a company is actually building like a common system, even using a Beacon framework, wherein all the banks, fintechs update all the details, right? Now using blockchain and all, it's actually an idea. I think there is not too much education that is given even from our fintech community on the everything stops with lending, neo-banking or banking, co-branded credit cards, etc. But there is a lot more. Even fraud itself has been fraud and risk management, etc. There's a company called not able to forget the name. They actually have 700 risk parameters through which where if you implement their SDKs, which a lot of banks are using, right? Why can't an Indian company do that? I mean, I'm just taking an example of fraud because that's coming into mind. But in every segment that you look in, wealth management, treasury, trade finance, there are like enough opportunities where you can actually go deeper, and banks would be actually more happy to actually solve and help you work for it. Maybe may not be always as a distribution, but maybe as a technology partner to them. And then if you can get it right in India, then you can actually get it, sell it outside, kind of a thing. Also, the thing is like a lot of this X on the people who have been with building core banking systems and the core banking systems, if they come out more into this, because that's seen this old system. Because today the challenges are for most of the new age entrepreneurs, they're only looking at the front facing APIs which a bank's exposes. But those who are actually built into this thing. So maybe having a combination of those people to build deeper technologies, I think it will happen basically. But this is what as a community that we can actually do is like show that those opportunities as well.
And it's very interesting. In the last 10 years, have been looking at fraud and cybersecurity companies, even coming out of India. It's not that they don't have very good outcomes. In fact, literally 60% of all these fraud, a good fraud solution company or a good cybersecurity company gets bought for incredible multiples.
Right.
And I'm talking about like from India also. Like it's just that media does not talk about it. Probably they don't know about it.
Right.
I'll give you an example. We were working for Nomura, and there was this company called Simility in that program.
Right.
They got bought by PayPal. Not much news.
Right.
Incredible multiples. And similarly, like so many solutions, they get very, very good outcomes. But still, people are not spending those 2-3 years to build something that is very deep. It takes time to build, and then the outcomes are also good. It's just that initially it's very difficult to find funding for such companies because there's no revenue, there's no distribution in the beginning.
At least 3-4 banks which I last week met, and they asked like, what is the problem to solve for this mule account and the frauds that is actually happening, because huge penalties the banks are paying and the huge cyber this thing, right? So like that, there are like enough opportunities out there.
Yeah. One thing, maybe I'll take again as a young founder, I'm also building in fintech. Is now I realize, after 2 years, is that as Mabel mentioned, right, in your investment journey, that if you turn 30, then it will easier. I realize now that if I would have worked at bank, then going to a lender, going to an insurer, going to a bank would be easier for me. So any advice on that? Because I mean, honestly speaking, in my research, what I've seen is typically experienced founders is what banks or any of the financial institutional services, they're able to build better businesses. Like someone like me who just come with maybe 3 or 4 years of experience at best, and who doesn't have any industry experience, takes that kind of entire year, couple of years to understand the industry. So do you think founders should spend some time in actually working at any financial institution or fintechs, or do you think directly starting in Indian fintech environment is also can be opted as an option, but though riskier?
I think you had already solved for that problem statement which you mentioned. You started you have a podcast, right? So basically building your thought leadership is what at the end of the day it matters. It's not that you worked in a bank and that will give you enough network, or you worked in a fintech company kind of a thing, right? So one is like constantly how do you, because today the good part is that all our the banking community, everybody who worked, all our friends in the bank, they are all now much more evolved. They want to learn new things. They are very much updated. They're more open for things, right? So how do you actually then ensure that when you reach out to them either through networking, community, thought leadership, your blogs, creating ebooks? Even from Open's perspective, even a few years back, we and Medici in the initial years, we created Banking as a Services report which we published in the Singapore FinTech Festival, which reached out to a lot of like the banks globally, right? Everybody is actually seeing your this thing, right? So figure out like your strengths. I mean, if you don't have like that much experience, like how do I build thought leadership? In today's world, it's much more easier to build that connect and this thing.
True. And another thing on top of that is, I think you covered a bit earlier, was many companies in B2C or B2B side that started in kind of a gray zone, right? They picked up that area that this is gray, maybe RBI has not defined. Now many of these companies are moving towards the area, or even I think some of the investors are also pushing that you have to be at least have one license or identified as a licensed entity in the purview of regulators in the India. So, do you think that, any of the fintech companies who are starting or is currently building should opt for some sort of a licensing way going forward? Or do you think, maybe working with the licensed entity and scaling can also be done? Because many of the fintechs face the challenge that they are not able to scale because they are not licensed entity, or many of the times they started in a certain area which was not identified, but as they scaled through, then, regulators come and told them that maybe only this can be done, this cannot be done.
So one way is like to work through the accelerators of, for example, RBI has the RBI Innovation Labs. They have this regulatory sandbox. So keep engaging with that. Secondly, most of the banks now, even ICICI has relaunched their innovation hub, wherein they actually invite startups to work on innovative technologies. And most of the banks would actually now have some kind of like innovation lab kind of thing. That's one area to work with. Then again is work with a licensed or regulated entity. It could be a fintech, where you understand like is there a particular solution that can actually add synergies, or maybe they don't have a license, but I mean they have a license but they don't have the solution. Maybe like in this particular entity that you're building can actually strategically partner with them. So those kind of like those the approach, but I would not advise any fintech entrepreneur now to start anything on a gray area. If it is not defined, probably then you are at that risk.
On that point, I wanted to add something. So compliance is not, it should never be an afterthought. You should, if there was, see, when we started with the neo banking model, there was no defined, set of things that you have to do these 10 things and all. So how do you go about building a trust? We took it on when we were a 30-member organization, probably at that time. We decided to go for ISO compliance. That's something that we proactively did. It was very painful, but it would have been even more painful if I had to do it after I was a team of maybe 200, 300 people, right? So putting ISO compliance, identifying that, this is something that would be required to build the trust with the, bankers that you're speaking to. Identifying that and putting your effort, even as a very young team, to work in that direction. That is something that, people should think proactively. It should not be like, my regulator told me, hence I should do this.
True.
I am doing something which involves trust, which involves users' money, which involves user data, and hence I need to do something to make it secure, and hence I need to be compliant. So you should start with that kind of a mindset, because if that is there, then everything else will automatically fall in place.
So just to add to what Mabel mentioned, in open, this has become then like a unit of its own, a culture of its own. You started with ISO compliance, then PCI DSS, then you go through the entire certain external auditors, and then you work with the banks, you go through all the thing, and then you standardize that thing. In fact, with one of the largest public sector banks in the country, we were the only fintech to firstly go through their 41-point InfoSec compliance. So this getting the compliance ready, that actually gives a lot of confidence back to your banking partners, your investors. So that is something we need to get it ready right from the initial part. Even for us now, when we're looking at like a GDPR compliance or SSC2, all of those things now, that department automatically does that thing. So that's one very key important factor for any fintech, whether you're a TSP or not, that should actually focus on.
Okay. So to end this, we will do an interesting one, a rapid fire. And so no answer should be more than 2-3 words. Okay, that's the game. So I'll start. Most inspirational founder or founders apart from Open?
Yeah, so for me, Razorpay founders, Harshil,
Okay, and Shashank?
Shashank.
I would say Perfuse founders, Ram. I really admire him as an entrepreneur.
Sabyasachi.
Yeah.
Top 3, advisors that you go to for any set of advisors.
My women founders group, the female founders group that we run, Upas, Lissy, a bunch of us, some 200 of us now almost. So that's a very neutral platform. We've kept out all investors, all media of sorts from there.
Only founders.
So only founders, core founders, and there you can do, girl bitching you want to vent it out on someone, you just want to get some solution, you are looking for someone who can help you out.
Yeah.
So that is one go-to group that is there for me.
For me, 314 Capital, Pranav Pai, then Temasek, Mohit.
Great.
314 Capital, Pranav Pai.
Great. IPO or M&A?
IPO.
IPO in India or US?
India.
Okay, this is a very interesting one. Idli vada, appam stew, pizza, or something else?
Khaman, dhokla, pani puri, chaat, vada pav, dabeli, all Gujju stuff.
Ahmedabadi.
Ahmedabad, hardcore Ahmedabadi.
I'm sure Anish is different.
No,
Obviously.
the talpakati biryani which I make.
That's chicken or mutton?
Both chicken and mutton.
Yeah. Name a few people, maybe investors or individuals, who have been most helpful in the open journey. 1 or 2 people.
There are so many of them. Yeah, we couldn't have done away with anyone. Chana Priyadarshini for taking that big leap of trust on us. Amit Goel for being around us, even though he didn't actively invest, but he was always there to connect us to folks. Pranav Pai, big part of our journey. The entire 314 team actually, they've been very hands-on in their journey with us. Every opener that ever worked with us, couldn't have done it without this awesome tribe that we have. I don't know, taking names is not sounding fair to so many other people. Vaibhav, Chirant, so many of them actually. Aparijit, for that matter. They're very, very. Some people were critical, not for the money they gave, but for the connections they made, right? So.
This is a rapid fire, not a.
Yeah, I'm sorry about that. It should be a few.
No, it's fine.
This is the one where you have to it's not.
It's not a rapid fire. This is not a rapid fire question. What about you?
I think it's it's very unfair to actually name people.
Our own co-founders, Deena, Ajish.
So it's openers, then the investors, the banking partners, basically.
Yep.
All of them. The reason why we exist today.
It's in the cricket parlance, at this company, everybody is an opener. Okay, which fintech companies do you admire?
Stripe.
Stripe all the way. We've been following them for a very, very long time. Indian fintech, Perfumes, I do admire them for what they do. I do admire M2P. They are all part of our journey in some way or the other.
Right.
So,
If you are starting Open in 2024, anything that you would have done differently compared to 2017?
I wouldn't do anything differently. This was exactly how it was meant to be, and I'm loving every minute and every moment of it. I really can't do anything different.
Yeah, I think the same.
And I know that you guys are very well read in terms of what's happening in the fintech space globally. And so if it was not this company, hypothetical question, right? So easy. So if you're not doing this, what is that you would be building? Which other segment in fintech or otherwise?
I would be doing fintech. I don't know any other
Which segment is what he's asking.
Which
If not fintech,
No, in
No,
fintech.
within
in
in
fintech.
fintech, what you would be doing if not this?
I don't know. I would be doing B2B, something with B2B fintech for sure, because I wouldn't do B2C. I'm very sure of that part. It's not something that skill sets as founding team as well is. So we would definitely be doing B2B and B2B fintech and B2B fintech in India. All three of
I'll
them.
be building specific solutions to the banks, financial institutions. So,
Okay. So maybe we'll end with one last one, that apart from, we were discussing about, even at home you are always talking about fintech and all of that. Apart from that, is there anything else you do for, leisure, any sports or any other activity that is like you both enjoy a lot?
I grow vegetables. I love to do that.
Okay.
So,
and I cook a lot.
or so he claims. The cleaning is left to all of us. But yeah, he's a good cook.
Next time you are inviting us for that biryani.
Yes. And I bring a lot of innovation into cooking. So this time I did a AI machine which actually helps me build a dal, chennai sambar thing, and I have a dosha printer at home which prints the things. I mean, that's just for the
You
fancier
guys
stuff.
build that or?
No, I just
Okay.
got it from this thing. But I mean, this is for the fancier stuff. I like cooking basically. And
Yeah.
Hey guys, thank you so much. It's one of my favorite thing to do every 2-3 years. I think this is the ultimate group of people I want to sit and discuss fintech, and congratulations on your journey so far. And we'll be vouching for you for your IPO whenever it happens in the future.
thanks, Amit.
Thank you.
Excellent work. I think you have inspired. I'll also tell this to the audience that I went to Kerala Startup Mission event in Kerala, and this is very contextual, right? People should listen to this. That when I went there, all that people look up to, like the people they look up to, the company they look up to, is Open. And that Open has inspired so many entrepreneurs in Kerala. I just couldn't believe myself. Like it's super inspirational there, and of course in the rest of India as well. So thank you so much for doing what you guys are doing.
Thank you.
Thank you, Amit.
Thank you so much.